Hi, this is Clayton Ream with Van Ahn & Company with your afternoon grain and livestock marketing comments for October the 16th. Well, today was the end of the week, obviously, and the markets were a little sloppy in true fashion, with the corn market actually battling back and finishing just a penny higher, with the bean market giving up ship here, down 6 cents, closing slightly below that important $9 level that we've been talking about. And the wheat market was really the drag here today, down nearly 15 cents at one point, finishing the day down around 8 to 12 across the complexes there. So moving forward here, we got harvest. We got a good open window here where guys are going to get a good chunk of the crops off the ground. Soybean harvest probably going to be around that 80-90% complete when we come in on Monday afternoon and get that crop progress report. Corn harvest probably going to reach close to that 60 to a minimum of 50% harvested, and I think that's going to be the true tale here as these farmers are able to get off the combine and really assess things and get the bin situation squared up. That's going to make the market that much more interesting, because we're seeing a fairly firm basis in central Illinois, which leads to the question of, did we really have that big record crop in the east last year like the market's been, USDA has stated? So that's going to be a tough tell, and it just seems like to get the bin crops out of the bin, it's going to take a strong push in basis or a decent futures rally to go forward. And that leads into the demand aspect. Export sales again were pretty strong across the complexes, led by the soybean market, but after the strong run to start the week, giving back some of those gains to close out the week. Those are going to be important numbers to watch. We don't really have any big USDA reports coming up for a few weeks, so it's just going to be the continuation of harvest. And then the seasonal time frame. October is usually a strong month for commodity prices as we work into November, and then you're going to start to hear the old adages of, if the bull gets Thanksgiving, the bear will get Christmas, or vice versa. So a lot of different things to pay attention to in the charts and the seasonal patterns right now for grains. So stay on top of that, or give us a call if you got any questions. Over in the livestock markets, we got the cattle futures actually finishing the day near limit higher across the board. Strong cash trade. JBS is supposedly paying $205 on a dress basis. We got $130 live basis throughout the nation, so that's about $5 higher compared to last week. And on a technical aspect of it, the charts now have that gap down from last week higher, and gap higher, and now a breakout through a potential bull flag. So this is going to give the market a little enthusiasm. The managed fund positions really don't hold a lot of length in that market. So if these numbers start to tighten up, we got these heavyweight cattle cleared out, this market could be in for a bit of a stronger market moving forward as well. But it's going to come down to that cash, and it's going to be another volatile and choppy session as we go through next week as well. The hog market down a little bit today. We got a strong kills again around that 2.3 million head. Those are some pretty big numbers for this market to handle around these prices. So it's going to be interesting if demand is going to be able to pick up pace to offset some of this increased production. Hog weights aren't really doing anything too burdensome, with pretty decent weather throughout the nation for these hog producers. So it's also just an important aspect of the chart to be paying attention to, even though 68, 67 cents isn't anything too much to scream home about. It's a fairly decent price for this type of slaughter moving forward. So in that market, pay attention to the bear spreads, with the deferred contracts potentially gaining on the nearbys is something to maybe watch. If those spreads don't necessarily start to perform in a seasonal pattern here, the bull spreads could be telling us something from the demand side of it. Outside markets, you had the energy markets rebound from yesterday's sell-off, so that's a good sign for commodities in general. The dollar was fairly quiet, with the stock markets fairly steady on the day. As always, trading in futures and options provides risk and loss, is not suitable for all producers.